So why else is Bitcoin going to succeed? Why is it succeeding? Well, because hypothecation is so much more difficult. I'm not saying impossible, but the layer 1 and the layer 2 protocols, Bitcoin and Lightning, those mitigate the need for hypothecation, right? It's less likely you would need to trust all your assets. If I can move 1% of my assets a day for a Satoshi, then I wouldn't put all my assets in a bank. Right now, all of your assets, all your stocks are probably in a bank. You don't hold any of them.
Right.
In theory, you could actually take possession of your stocks as like certificates and put them in a safe deposit box and, take them out of street name, they say.
Yeah, I don't even know if you can do that anymore.
People don't do it.
Yeah, I think that I may be wrong about this, but I think the DTCC now officially owns all stocks, even if you own the certificate.
Yeah, so it's harder and harder.
Yeah.
Yeah, so the protocols mitigate hypothecation, and also they punish hypothecators. Like if someone did go naked short Bitcoin in order to make a quick dollar and you pulled all your Bitcoin off the exchange and they have to then settle, right, creates a massive short squeeze.
Yeah.
So whenever you pull those securities away from the hypothecator, then they get squeezed. So if I knew that it was impossible, like if you had $1 billion in gold, I know you're never going to take delivery of it. I can, short it 100 to 1.
Yeah.
And if I knew you'd never take delivery of the Bitcoin, I might get a little bit cute. But in a world where people can, then, there are exchanges that fail. Just like there are bad banks that fail. It's just that they're failing continually in Bitcoin because that's the nature of the free market. And that's how the free market squeezes out defective actors and malicious actors.
Right.
And the ones that have perfected security and the like, they succeed. So the fourth dimension of virtue for Bitcoin is, superior authentication. And again, the layer 1, the layer 2 protocols and cryptography in general, what you can do, proof of keys and the like, and proof of reserves, they solve the authentication issue. And it's solved, for the first time effectively. When you want to settle or you want to buy a piece of real estate, sometimes it takes a week, 2 weeks to do a title search. And it's a manual process. So you're talking about a hyper expensive manual process to even do a title search on a small amount of property. And Bitcoin gives you a way that's, presumably it's somewhere between 1,000 and 1,000,000 times cheaper and faster. Like it's not an order of magnitude. It's many orders of magnitude better on the authentication. And maybe even more important than that, you can automate the authentication. So that means that a computer program could authenticate 100 million different holders every hour for a nickel.
Right.
And when you get to that level, that opens up the possibility to create new types of businesses and new types of applications that otherwise would have been cost prohibitive because of the friction involved. Bitcoin succeeds over fiat based upon transportation and dynamics too, the fifth element of virtue. It's fast on layer 1 and it's instant on layer 2. Moving $100 million of property on layer 1 in an hour is fast, but moving $100 million or maybe even moving $100,000 on layer 2 in a second for nearly free is instant. And so it's just much faster. And it comes with no artificial geopolitical constraints. right? Even when you have fast on fiat, you have fast subject to geopolitical constraints that are continually shifting. Yeah. Whereas fast in Bitcoin has no geopolitical jurisdiction. It's cyberspace. It's orthogonal to geopolitical space. And what you want is a situation where 1 billion people in China could all authenticate themselves and trade on a value network through the Great Chinese Firewall to a website sitting in Cuba or sitting in the US. You'll never do that with any kind of fiat system.
Right.
In fact, the entire Chinese system is constructed to create a capital firewall so that capital can't flow out of China or in China. The central bank chokes it in order to maintain the RMB peg versus the dollar. So that idea that I can cross that layer instantly, that means I can build a value exchange into 1 billion transactions a minute. And I can build a value exchange that flows in 1 billion transactions a minute for 1 billion people across 100 million different applications. And they can all move fluidly, right? So I guess it's the difference between, if you want a metaphor, right? Fluid flow into a container, like that's Bitcoin and Lightning. Or you take 1 kilogram gold blocks and you can move, or even London good delivery bars, right? Or are they 400 ounce or whatever, I forget. Yeah, 400 ounce London good delivery bars. You can build whatever you want with those. But one of them it's like Legos that are 400 ounces each. And the other is water, liquid, or air. There's just no comparison between the two.
Static versus dynamic.
Yeah, and completely liquid. What I want you to do is construct a tornado with London good delivery bars of gold. You can imagine a tornado with air and water. Or a whirlpool or a cyclone. You just can't imagine that with big, bars of gold, because one's discrete and the other's continuous. Exactly. It's a difference between discrete fluid dynamics and maybe arithmetic with Legos or something. It's like, you're like, well, Legos is fine. Yeah, it's fine for third graders.
Yeah.
But Legos, you can't design a rocket nozzle with Legos.
Right.
You're not going to design the wing of a supersonic airfoil with Legos.